So the H-1B visas have skyrocketed, and if you are a recipient or someone who has an H-1B visa, or you know someone who does, this may be applicable to you and could have a negative impact on your credit due to the stresses associated with it. Now, let's get into the fact sheet. This comes directly from the WashingtonHouse.gov, so you know it's official. And it says that President Donald J. Trump suspends the entry of certain alien non-immigrant workers. Now, this is what you got to understand about the H-1B1 visa. It positions people to come into the country based on their knowledge level and things of that nature, but they also are able to tap into the credit system due to the fact that anybody can tap into the credit system. All they need is some type of tax ID number or social security number. So they're able to leverage credit and use the same credit laws that a natural born citizen or a citizen, of America is able to utilize. And this right here is why it's important for you to thoroughly understand how credit works overall, so you can understand how to properly build credit, maintain credit, grow credit, or clean up things that may be negatively impacting your credit through the duration of you being here. So it says that Trump signed a proclamation to restrict the entry into the United States of certain H-1B aliens as non-immigrant workers, requiring a $100,000 payment to accompany or supplement H-1B petitions for new applications to curb abuses that displace U.S. workers and undermine national security. So it's a lot of different nuances that go along with that. But this is more so about you who may be affected from a credit standpoint, or may not even have knowledge of how it all works, because you might have set up a bank account, or you don't have the ability to access certain funds due to the fact that you have a slim or a thin or a non-existent credit profile. Well, this is what it boils down to. And if you want access on how to start building your credit, restoring your credit, even from a beginner standpoint, and possibly even profiting off of it due to the fact that you know other people who also need this information, and you can plug them into my system and education that allows them to learn how to build credit, or anybody else. It doesn't have to be mine, but now you can make money if you are part of the community that's listed down below. But these are the factors that I want you to understand when it comes to your credit. It's 5 main factors. If you can remember these, then you can position yourself to know exactly what you need to do to build and maintain credit across the board. Number 1, it's important for you to understand payment history, what it means, what is it, how it has a negative impact, and what you need to do about it if it is causing a negative impact on your score. So payment history is responsible for 35% of your score. 35%. When you do the math, that's up to 192.5 points per bureau or per credit reporting agency. So that's a big deal. That means you want to have all on-time payments to the best of your ability. You want to have 100% payment history so you can maximize the points that come from that. And that's just the first factor. The second factor is credit utilization. Credit utilization is responsible for 30% of your score, better known as 165 points. This is if you have a credit card, a line of credit, or you have some type of account that is revolving. This is what makes up your credit utilization, that 30%. When it comes to using credit cards, you want to make sure that you're using it but paying it off, preferably in full. But when they report, you want to make sure that they have a low balance every time they report. So it's going to be important for you to know what day they report to the bureaus, so you know, okay, I need to have my balance non-existent or low as possible before they report. And this can help you get up to 165 points. Now, the higher the limit, the better. So if you just have a small credit limit like $500, then you have to build your way up. And the best way to build your way up is by making sure they're reporting a low balance. They see a track record of on-time payments, so that when you ask, sometimes you don't even have to ask, but when you ask for a higher credit limit, they're more likely to say yes, because they see what you've been doing already, and they're like, okay, I could trust this borrower, I could trust this person to pay me back in a timely manner, because history is a glance at what they're likely to do futuristically. Very important. The third factor that you need to understand is credit history. Credit history is just basically an average age of your score. That's important to know, because when you start opening up accounts, you don't want to have accounts that you just close, or you don't want to just have so many different new ones after you start establishing credit, because too many new accounts can lower your age. Because keep in mind, it's an average. So if you had 5 accounts and then all of a sudden you had an average of, let's just say, 5 years of credit history, the minute you apply for a new account, you can lower your credit age. So now you have a brand new account plus the accounts that had a 5-year average. Well, if you do the math on that, you end up lowering your credit age down to about 2.5 years versus 5. So you lower your age about really 3 years, but versus 5 years, you end up lowering your age all the way down to 3 years. And that is because you have so many new accounts. So you just want to make note of when you have an account, aim to keep it open for a long duration, apply for things when necessary, but just know that it can have an impact. Not that you can't overcome it, but that impact can be significant. The last two factors that you want to make sure you're aware of is new credit and credit mix. New credit is basically inquiries on your account. So if you're applying for a lot of different things, those inquiries have the ability to drop your score up to 55 points, small amounts, but it adds up and it can cause a dropping of your score. But credit mix is just a combination of account types. I know you probably heard the term of diversification. Well, it's like having diversification on your credit profile. Do you have a credit card? Do you have any personal loans or things that report as installment loans or debt? Do you have the ability to make on-time payments, even getting into like utility bills? Those things are starting to be factored in. So you having the ability to pay off multiple account types puts you in a position to where you have good, solid mixture. If you can understand those 5 factors, now you can position yourself to say, okay, I know what I need to be doing. And if you ever have a hiccup where you have a late payment, if you ever have utilization issues where your credit cards are too high, now you know what to do in order to clean it up. Now, if you need help with cleaning up and restoring your credit, we can help with that as well. But if you want to join the community where you can get ongoing access to this information that positions you to know how that works, but also positions you to be able to share the community with others so they too can know how it works and you can earn ongoing passive and residual income from inviting people to the community as well, the link will be available down below. So hopefully this helped you, especially with the skyrocketing of the HB1 visas and the stresses that may come from that. But this is something that impacts anybody who's able to leverage and use credit. So this information is for those who are leveraging credit in any way, shape, form, fashion. Whether you are already a citizen, this has been helping people. But if you have a H-1B visa, then you need to understand how credit works so you can make it work for you. I'm Mr. Smith. I hope you enjoyed this message. See you on the inside in the community. Signing out. Salute.